A huge rally on Wall Street overnight after data revealed the US Federal Reserve's aggressive rate hiking may finally be making a little headway in hosing down inflation. Official figures showed annual rate of core inflation cooled in October from a four-decade high of 6.6% down to 6.3%. Doesn't look like much, but it's one small step. Core excludes food and energy, but the measure that includes it all is headline inflation, and it slowed to its lowest level since January, 7.7%. Here's the reason: a sharp fall in the cost of energy. Now, that doesn't mean that things are getting easier for American households. The two other basic needs, food and shelter, are still rising. Housing costs saw their biggest increase since August 1990. Wall Street doesn't care about that, though. What markets saw in the data was an opportunity for the US central bank to take its foot off the gas on interest rate hikes. Bond yields dropped as investors bet the data will have the Fed lifting interest rates by a more modest 50 basis points next month rather than 75. And markets ripped higher the minute the data dropped. The S&P 500 surged to its best one-day performance in 2.5 years, and the Nasdaq went silly because nothing says buy tech like a slight slowdown in the pace of rate hikes. Our market followed, and like in the US, tech stocks outperformed. Even Medibank shares rallied despite the awful headlines. And the US dollar had its worst day since 2009, which obviously helped the Aussie. It's at a 3-month high above 66 US cents. Bitcoin continues to drop. And that's finance.